This is the April 14th meeting of the Audit Committee of the Environmental Facilities Corp. And I turn to Secretary Kate to call to see who is present.
Certainly. Chair Krasinski.
I'm here.
Director Jamarkey.
I am here.
Director Zarofsky.
I am here.
Wonderful. We have a quorum of the committee. I note for the record, I anticipate Director Corcoran will be joining us, but we can proceed with all business.
Great. We have minutes from the December 7th, 2023 Audit Committee meeting. And if somebody wants to make a motion, we can approve those.
I'll make that motion to approve the minutes.
And I'll second it.
Great. All in favor? Aye.
Aye. That's right.
All in favor. Great. So approved. So today we have a presentation by KPMG. Jeff and Grace are going to walk us through it on the plan for the fiscal year just ended, right, April. So, go ahead and describe that and we'll ask questions after you're done.
Well, thank you and good morning, everybody. As Charlie alluded to, my name is Jeff Koch. I'm the managing director with KPMG who leads the overall engagement. And joined with me today is Grace Ketchigan. She's a senior manager out of our Albany office. She's coming on to replace Jeff Mabb, who had been on the account for several years, but Grace does bring several years of experience with herself, having been with us for 13 years, working on various state and local government clients. It just brings that great expertise and fresh set of eyes to the engagement of the account. So we're excited to have Grace joining us here today. We had sent out our slide deck, which is our standard required communications that are required by the auditing standards from an audit plan standpoint. We are currently in the planning/risk assessment process of our audit, and we've developed this plan assuming, based on some preliminary conversations with management. But as we do go through the year, things can change, and as those do happen, we do update management as well as the year-end results, updating the committee for anything that we do identify that may have changed from our plan as required by the audit standards. So we'll go through the slide deck pretty quickly here. There's not a lot of changes from the prior year. Just looking at slide 2, which is our basically summarization of kind of what we view a KPMG audit is. And you'll notice on the most left side of that is the logo quality, because we are all about the quality audit. We want to make sure that we're presenting great quality and making sure that we're identifying any risk or matters that are needing attention from the audit standpoint to ensure that there's a quality product put out by management that does go out to the markets. And the second important aspect is the experience. As I just alluded to, Grace has the 13 years experience. We want to make sure we're putting an experienced team in front of you that understands your needs, your industry, and kind of can address those issues as we kind of go through those. On slide 3, this is just kind of a summarization of what we do with our tool, which is called KPMG Clara. Our tool is kind of a IT power tool that enables us to do a lot of risk assessment as well as utilization of data and analytics. We are working even further, even with some generative AI, but none of that's kind of implemented in the audit for this year. But we do continue to try to implement data and analytics to, again, really get to that quality, focusing on those outlying activities that may occur during the year, as opposed to sometimes just sampling. And we'll talk a little bit about that as we go through our audit plan today. Moving on to slide 4, we just want to present to you our audit team. As I noted myself, I will be leading the overall engagement. Grace Ketchigan, again, taking over for Jeff's role as the lead audit senior. Kinsley Thomas will be our in-charge senior. She, again, has lots of years of experience in the state and local government practice and will be leading our team, which will be made up of our MWBE partners with Tiana Wu and Amy Dong, who have been on the engagement in the past, both representing from an MBE standpoint, Team Avalora, and from a WBE, Long Island Financial Management Services. But overall, there's a lot of the blue boxes here, which are consistent with the prior period of consistent individuals on the engagement. The other individual that did change would be our secondary concurring partner review. Is on all KPMG engagements. There is a secondary partner who works side by side with me and reviews the financial statements from a quality standpoint and making sure that any additional risk they may identify, we're making sure we're addressing through that process. So just, again, getting to that overall quality audit. I'm going to flip now to slide 6. And this is just kind of a summarization of what deliverables we will have for the current year audit. The first, obviously, is the basic financial statements for the corporation for the year ended March 31, 2024. That will be performed in accordance with U.S. generally accepted accounting pronouncements, as well as government auditing standards issued by the Comptroller General, commonly referred to as the government auditing standards. We do perform an audit. There is, a consideration for internal controls, but the focus of the audit would not be on testing internal controls. However, where we do deem it necessary to test controls, we do evaluate those controls. And if any matters do come to our attention that we would be dubbed as a significant deficiency or material weakness, we would present those as part of what's called the Yellow Book report that does get issued at the end of the audit as well too. We will also be performing the examination of the corporation's compliance with the requirements of Section 201.3 of Title II of the Official Compilation of Code, Rules, and Regulations in the State of New York. This is the investment compliance engagement that we do. It's performed in accordance with attestation standards, and we do provide that opinion at the end of the year as well too. And the last rule is what's referred to as the single audit or uniform guidance audit. We do audit those programs that are deemed to be major programs in a fiscal year based upon the uniform guidance, which is 2 CFR 200, to ensure that there are no material noncompliance matters or material weaknesses in internal controls as it relates to the operation of those programs. Slide 7, again, is just a summarization slide that talks about the various aspects that are included in our slide deck for the required communication section. The first being the role of the identity engaged partner would be myself as the managing director here on the account. And we'll go through the other slides in the next few pages here. Slide 8 talks a little bit about materiality in the context of an audit. And we do set materiality as a quantitative number. But I think the most important thing to talk about on this slide is it involves auditor judgment. And it's not just based on numeric numbers. There are also qualitative factors to be considered. Any matters that come to our attention that would be considered material to users of your financial statements or historical knowledge of the financial statements that can change from what the numeric number would be from a mathematical calculation, considering those qualitative aspects. Slide 9 is our timeline. It is very consistent kind of with where we've talked about in the past. As I mentioned earlier on, we are in the planning and risk assessment phases of our audit, so we are still kind of finalizing that overall audit plan. But from our preliminary discussions, we do feel that the audit will be encompassed in the coming slides here about what our key areas of focus will be. However, if anything does change, we will make sure that we do notify and update that. One other thing in the middle of this page, there's a talking about our year-end testing that'll happen in May and June. We noted that was virtual, but it's really more of a hybrid as we've talked with management as we've kind of returned back to what I'm calling the normal world, if we can get normal after COVID. Whereas if there is a ability for us to come on site and do any sort of testing because it's quicker and easier and more efficient for management, we're just a couple doors down. We're happy to stop by and we'll go through that information and kind of develop that into our overall audit approach. We will be finalizing our audit in June, hoping to issue by the audit committee here, which I believe is going to be around June 20th. And then after that, we'll continue our work for the uniform guidance audit, looking to issue that later on in the summer. And then throughout this entire process, obviously, we'll be talking with management with any concerns we have or anything that does come up. Slide 10 is basically our risk assessment for significant risk. And the one noted here we have is management override of control, and that's consistent with the prior years. And that's not to say that this is a risk specific to the corporation as a whole. This is one that's present at every entity, though the degree and methods can vary on that. This is just that management is in a unique position when it's preparing the financial statements that it could manipulate those records. So we make sure our audit approach does consider that and design some procedures. Some of the things we may do is gain an understanding of the financial reporting and journal entry controls that are in place, review journal entries posted throughout the year, review any accounting estimates that are made to kind of understand the basis for those, and incorporate elements of unpredictability as we do some of these procedures as well too. Always having a level of professional skepticism throughout our audit. With that, I'm going to turn it over to Grace, who will kind of take us through some of the key areas of audit focus.
Thanks, Jeff. So through our understanding and inquiries with management, we have noted that there are no major changes at the corporation this year. So there are no significant changes to our audit program from prior years. So I will go ahead and highlight some of our key areas of audit focus, but I trust that you guys can read in detail as well. So regarding cash and investments, we plan to confirm all balances in cash and investment accounts. We do independently price 100% of investments reported at fair value with our national pricing desk to gain comfort over the valuation of that. As Jeff mentioned earlier, we will perform our investment compliance test work and issue an examination report on that. For bonds, we do confirm a sample of outstanding balances. Same with bonds payable, we can confirm a sample of outstanding bonds payable with the trustees. For the OPEB liability, we do utilize our KPMG actuarial specialists to help us review the major assumptions utilized by EFC in that calculation, and we do test the census data changes. Moving on to slide 12. For grant income and expenditures, we do vouch a sample of both the revenue transactions and the expenditure transactions to the supporting invoices and assess the compliance as well. We do confirm with external counsel and general counsel any contingencies as part of our standard procedures. Moving on to slide 13, we do perform the single audit as Jeff mentioned previously. This year, we will have two major programs, both Clean Water State Revolving Fund and Drinking Water State Revolving Fund. We will test these for both compliance and internal controls and issue that report. Moving on to slide 14. As I mentioned a moment ago, we will utilize our actuarial specialists as well as the national pricing desk for the investments. And KPMG is closely aligned with New York State in our strong belief in providing opportunities for women and minority-owned enterprises. So we will continue to utilize Team Avaloria and Long Island Financial Management Services to team together on this project. Any questions before I turn it back to Jeff?
No, perfect. Okay, so on slide 15, again, this is just a summary slide of any new effective accounting standards that are applicable. We've included for the current fiscal year as well as the future years, just for the upcoming items. Related to the current year, there are two that would be applicable. The first is GASB 94, which has to do with public-private and public partnerships. This provides some sort of guidance associated with that as it pertains to these types of relationships. Typically not seen a lot out in a lot of state entities as far as that goes, especially in New York State. So we don't anticipate that having any impact to the financial statements, but it is one that would be applicable this year that management would evaluate. The second is GASB 96, which is relatively related to leases. The GASB 87 that was adopted in the prior year, 96 is more subscription-based IT arrangements, typically seen if you have large cloud system implementations and such. So again, I know management was evaluating that, but most likely will have little to no impact in the current year on your financial statements. Going forward in the subsequent year, there are a couple of pronouncements that will be applicable. GASB 100 has to do with accounting changes and errors, and this is a standard that may not apply in a given year, but if there was a matter that was considered a change in how you accounted for something, or there was an error in your accounting that needed an adjustment for the prior year, it provides the additional disclosures you would be required to have associated to that. But again, that's not something typical that happens on an annual basis. It's more just kind of aligning the guidelines there. GASB 101 has to do with kind of compensated absences and just provides a little bit more guidance on what's to be there and what's to be disclosed associated to those. Typically, those are typically already disclosed, so this is kind of more of a minor impact, if any. And then in 2026, there will be one called GASB 102, which is certain risk disclosures. And this has to do with evaluation of certain items that could give additional risk to an organization, that there would be incremental disclosures for the users of the financial statements. Nothing that would impact your financial statement numbers or new numbers that would come on, but more so a disclosure thing and something just for future years to consider as far as that goes. The next slide here on slide 16 is our shared responsibility to independence. KPMG has a system of independence quality control in place. And we make sure that there are certain relationships that KPMG prohibits, employment relationships or others. I think the most important thing to talk about in this slide is that we do evaluate as of today that the team that we propose for KPMG as well as KPMG a whole is independent of the corporation and capable of doing the audit as such. Slide 17 is just our responsibilities. A couple things to highlight here is that from a management standpoint, the second bullet where the audit does not relieve management or those charged with governance of the responsibilities associated to the financial statements. They are still the responsibility of management, and we are more so just auditing the financial statements to provide our opinion on the financial statements prepared by management. Our responsibilities will continue to be kind of what we're doing today, communicating clearly with those charged with governance, the responsibilities of the auditors, and any matters that we do identify throughout the audit, and ultimately issuing the opinion associated to those financial statements. The last slide here on slide 18 is just kind of what I call the brain dump of various inquiries that we do perform as we do go through the audit. We like to just include these to just kind of give a summarization to the committee of some of the matters that we would inquire about. If anything does come to any of the committee members' attentions, please don't hesitate to reach out to myself, and I'll be more than happy to discuss those things. So that does prepare what we have ready for today. We will open it up if there are any other questions remaining.
Anybody have any?
Yeah, I have a quick question. On the GASB 102, certain risk disclosures, right? Are those like emerging risks? What something with cyber? What would those be?
Yeah, it's more aligned with if there's some sort of concentration risk associated to your financial statement. So if you have a specific revenue stream for one source that presents a more risky situation to your financial statement, if that revenue stream were to say, become problematic or dry up for some reason, it could impact your financials. There's disclosures you would want to make to the users to let them know about that. So it's really if there's some sort of constraint or some sort of concentration risk associated to it.
So kind of looking at the distribution of income, and if there's more than a certain percentage of income associated with one stream, what's the risk of it stopping, and
Correct. Yep.
kind of a long-term planning scenario.
Exactly. More so that there could be risk, but again, not that there's one eminent, but just could be, kind of going along with the lines, even with a little bit of the going concern. It's always a forward looking, saying, is there anything that could hinder the operations of the corporation going forward to make it a concern?
So just to build on Vita's question, if I can,
Sure.
does EFC's particular world or operations or mission present any specific challenges or not on that front? I'm thinking about politics. I'm thinking about all the things in the world that are circulating now in terms of how one predicts potential risks to that type of
How would you qualify or quantify that?
Yeah.
I don't think the standard really gets into that because, again, I think it's more into the concentration of where are the sources coming from. I think there's always political pressures that have always existed. So I don't think the standard would contemplate or change anything compared to what it is today. This is more, I think, narrow to that specific from a concentration standpoint as opposed to some of the forces that might exist today.
Thank you. Interesting. We'll watch that.
I've got a question. You mentioned AI briefly.
Sure thing.
I guess I was wondering, since last year, that has changed. And
Absolutely.
I'm really not thinking of it in terms of what you do, and how you prepare your audit. I'm actually thinking almost as a defensive mechanism. Are there things that you as a firm, or maybe you're coming up with this, like almost general defensive measures that a place like this would take to fend off what you see as, potentially AI related, scams, duping somebody into doing something wrong? Just I guess I'm wondering if you're working on that or if you have anything.
Yeah, it's a great question. I would have to take a look at that. Nothing specific's come to mind that we've necessarily get into. We're, again, from our internal standpoint, are really just getting into the start of it as far as that goes, and developing our internal tools that kind of help us with the audit information and nothing that we can rely on per se, right? Because anything we put into the tool from a prompt standpoint, we don't rely on what comes out. We still need to verify it because the tools are not 100% perfect yet. They're still being developed. It's a question I can take back and see what we've done associated to it. Nothing that's coming to my mind that we've looked at that part of it yet. But that's a great point from an organization that AI could be kind of contemplating too.
Be a target, just in general, but
Yeah.
we don't know
Like
what- we don't know.
predictive. Yeah, oh, I'm sorry. Like predictive analytics, like if it's in your database from other clients, can you spot those risks and get some predictive analytics? Can you remind me, Jeff and Grace, how long have you guys been using Clara? I remember when it was introduced to us and we asked questions. I can't remember how long ago
Yes.
that was. It's
this
relatively
will-
new.
Correct. This will be our third year on Clara.
Yes.
So we continue to refine every year, and then we continue to find different tools that we'll utilize. So as an example, we talk about with your census data from an OPEB standpoint. One of the ways we're looking at that, historically, we may have said, okay, give us the census data. We'll select a sample from there. We may pick the same employee multiple years in a row with no changes and so on. So we're doing more of an analytic where we're comparing the two populations from the prior time we looked at it to now and letting it tell us what the changes are, and then evaluate, is there a risk to those changes? And should we be inquiring about more of those ones that change to make sure it's a change that is correct associated to it? If someone's birth year changes, for example, and it's a significant change year over year, that's going to raise flags as opposed to our old methodology per se. So we try to find ways where it would make sense. We've been doing analytics to an extent for years now with anything, for example, when you think of your fair valued investments, right? We brought up front a while ago where we take 100% of that population and put it into a tool that doesn't use your pricing source that you get from your third parties, but compares it to what's out there on the market from other pricing sources to make sure they're all converging to the same point. So we do try to find ways to compare that to markets to say, hey, what are those values doing? We continue to have other enhancements. We were working on a tool that we were able to get a dump of data from our clients, and it will go through all the journal entries and kind of map them up from a revenue standpoint and kind of plop out the ones that are kind of the outliers. And again, give the auditor the way to kind of look at those things. From a generative AI standpoint, we haven't necessarily built the database enough to put client data into it, but that is a phase that we are working on, and in future years will be something that we will be talking about. And I'm happy there's some materials I can kind of share with Albert and Emily here that we can kind of share with the committee as well too, and some of that stuff, some notes that we have as well too. So if that would be helpful.
I have one sort of, oh, sorry, go ahead.
Oh, no, go ahead.
No, you.
I was saying thank you for that
Oh.
answer.
Sorry, good answer. Yeah, thanks. That was interesting. I have a question. You talk about conflicts. I'm wondering conflicts with you guys too. Like you talk, New York City, does KPMG handle there?
We are not the auditors of New York City.
Okay, but again, there could be some potential, and you look out for those.
Yeah, we definitely look out for that. We definitely have our rotation system. We have what's called our partner rotation system, as well as our managers. We make sure that different engagements, we are ensuring that individuals are not on there. There are some engagements where we make sure that the secondary partner is from outside of our own office as well too, to kind of make sure there's that level of non-familiarity per se with the engagement, to kind of make sure that they're focusing more on what the standards truly say as opposed to who the organization is.
Okay, great. Excellent. Anybody else have anything?
Here
If
we go
not,
again.
yeah,
Let's give it
thanks so
another
much.
round.
Sounds great.
Thanks, Grace and Jeff, for coming and explaining this. Sounds good.
Absolutely.
Great. Thank you.
Thank you all.
Thank you.
Well, with that, I think that's the business of the audit committee. And do we need a vote to adjourn or just? Okay, motion to adjourn.
Second,
In a second. I see
in
it.
favor.
In favor. He's in favor. Great. We're adjourned. Thank you.
All right.
Thank you for coming.